LiteFinance, the world of financial freedom.
Hello, Trader Michael here. Guys, today we will discuss the things we have on the charts behind me, which are gold, oil and Bitcoin, and a few words about the latest Fed comments. But before that, we need to check the calendar for the upcoming week. So Monday, as usual, a little bit lazy, although we will have FOMC member speeches, Mr. Brainard and Bostich, which can give additional hints about the upcoming policy moves, although Brainard is set to speak more about the cryptocurrency market. Couple big countries like Germany and Canada have holidays, so we might see a slightly less volatility that day. On Tuesday we have year-to-year and quarter-to-quarter GDP from Germany, then IFO business climate. Later we will get consumer confidence from the US, which is another gauge for upcoming inflation. Later also new home sales from the United States. On Wednesday, Airbnb interest rate decision and crude oil inventories. Thursday we will get core durable goods orders from the US, preliminary GDP and pending home sales. Finally, on Friday we will get the PCE price index reading, which is another indicator used by the United States to spot the average increase of all domestic personal consumption. So, let's start from oil. And the name for which we should pay attention to is Iran, which is still in talks for an agreement about lifting US sanctions imposed by the Joe Biden administration. Either way, that didn't stop them from slowly increasing their daily output, which could potentially force a reconfiguration of global supply, which could be a bearish factor rather than bullish for the price of oil. Iran is the fourth biggest oil producer in OPEC+. Problem can be even bigger if we see worsening COVID situation in India, which is a third oil consumer. So upcoming trading sessions are more negative towards oil prices forecast. As for BTC, the week for Bitcoin investors has been very bad. It was red across major of the cryptocurrencies. BTC has one hidden drawback. It is based on proof of work. And to sustain its network, there is a huge sum of energy consumed. So if we take that into the calculation, this is not efficient. For example, if we produce X amount of energy on a global scale, to spend 10 to 15% of it for maintaining the network. Also, we got news from China that the government will deal with any bank or financial service that offers crypto-related services. And also BTC miners. I think it has more to do with the DG Yuan, that they want to reduce the influence of BTC on the markets. It is hardly logical, since right now, if we see the map of all miners by country, 60% of the hash rate is distributed to the miners located in China. The data is based on IP addresses. Nevertheless, I think the BTC will have its place in the global financial markets. At the moment, by most people, it is treated as a store of value rather than a means of payment. So, we could turn our eyes on eco coins, but need to look for those which are priced well. Because some of them are still expensive in my opinion at the moment. If we see a recent price spike like 100%, this is not a reasonable price at the moment. Okay, so lastly a few words about the Fed, which is signaling the tapering of the QE programs, which can be a good for the US dollar and bad for gold. Nevertheless, we have huge inflation on producer side, which eventually will lead to higher consumer product prices, which will, of course, be a very strong positive signal for gold. Right now it is still continuing its upward movement, and I'm still biased towards prices at least $2,000 levels. So the Fed rhetoric, where they are starting to prepare the markets for quitting the QE programs, will of course strengthen the greenback, but I would rather look for other dollar currency pair than Euro USD, since the Euro is looking very strong at the moment, while Europe is unlocking its economies for the summer. So that is all at the moment. Thank you for watching, guys, and till next time, take care, bye.